The UK is about to change how crypto is taxed, and it's a big deal. Starting in 2026, your crypto transactions could be under a whole new level of scrutiny. Whether you're a trader, investor, or running a crypto business, the rules are shifting fast, and if you're not ready, you could be hit with penalties or worse. So, what exactly is CARF? Who does it affect, and is this the beginning of the end for crypto privacy in the UK? Let's break it all down. CARF, or CARF, stands for the Crypto Asset Reporting Framework, and it was created by the OECD, which is the Organisation for Economic Cooperation and Development, and it's a group of 38 countries working together on global economic policies. And their goal is to tackle tax evasion in the crypto space by making crypto transactions more transparent and harder to hide. And the UK is now fully on board. In fact, it's aligning with over 40 other countries, including every EU member state, to enforce CARF rules from 2026. This is about to change the crypto landscape in a major way. And there are some key dates that you need to know. In 2026, crypto service providers, both UK based and foreign firms serving UK users, must begin collecting detailed user and transaction data. There's also another date here, which is May the 31st, 2027, which is the first deadline to submit annual reports to the tax authorities. And remember, even if your company is not in the UK, but you have UK customers, you must comply. And these CARF rules are actually casting quite a wide net because this applies to UK tax residents, and it actually also applies to any user from any country that has adopted CARF, which again is over 40 countries and it's growing. And so crypto asset service providers, or CASPs, must collect data from everyone, but they only have to report on users from CARF compliant countries. And it's not just the UK that's doing this. Like I say, the EU has its own version, which is called DAC 8 or DAC 8, which will work alongside CARF to ensure full transparency. So now let's have a look at what data will be collected. So what exactly will these crypto firms need to collect on us? Well, then you're going to need your full identity. They're going to need your transaction history. That's like things like trade volumes, timestamps, and even details about counterparties. And this is going to apply to centralized exchanges, custodial wallets, and other things like crypto transfer services. So essentially, if a platform helps move or store your crypto, it is going to have to comply. Now, you may be thinking, well, what happens if firms don't comply? Well, if you fail to comply, then the government is saying that the consequences are going to be serious. This includes fines of up to £300 per user. There's going to be penalties for late, missing or inaccurate reports. And the UK government is urging CASPs to start preparing now. So they're going to have to basically build things like reporting infrastructures. They're going to have to train compliance staff and update things like user agreements. And for firms that wait, the cost of catching up could be massive. Now, when it comes to decentralized platforms, here's where things get complicated and controversial. Decentralized platforms like DEXs and non-custodial wallets were not built for this, and they kind of thrive on privacy and anonymity, which is basically the exact opposite of what CARF is demanding. So how do you report on users when you don't control their data? Well, right now it's pretty unclear how or if these platforms can even fully comply should they want to. Some in the crypto space are already sounding the alarm, and there are even rumours of firms considering just leaving the UK altogether due to this high cost and complexity of compliance. So the UK's move to adopt CARF is part of a global push towards crypto regulation, and it's one that favours tax transparency, obviously, and law enforcement over privacy and decentralisation. So whether that's a good thing or a bad thing depends on who you ask, but one thing is clear: crypto is no longer this Wild West, not in the UK and not globally. And if you're running a crypto business, you need to start preparing now. And if you're a user, you should know that your transactions are becoming far more visible. Is this going to be the beginning of a safer, more compliant crypto future? The government likes to keep putting that message out, or is it the end of privacy as we know it? Let me know your thoughts in the comments. And if you found this breakdown helpful, don't forget to like, subscribe, and hit that bell for more crypto regulation updates right here on Enter Crypto. See you in the next video.